Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Thank you so much for joining. We're excited to discuss Betterment Mega Backdoor Roth IRA, how to contribute $70,000 to your Roth IRA in 2025. So today's session will be great for those who are self-employed and therefore eligible to set up a solo 401k as long as they don't have any employees, non-owner, non-spouse employees, and who are looking to maximize funds that end up in a Roth IRA, specifically a Roth IRA at Betterment. So after today's session, you'll learn the process to be able to make these types of contributions and have the funds ultimately end up over in a Roth IRA at Betterment. So if you're finding this to be helpful, please like the video and share it with others who might find it to be helpful. There's a growing number of solopreneurs out there. So a lot of folks are maybe behind on their contributions. So it's a great way to get caught up on their retirement savings goals. Also, if you subscribe to our different platforms, whether on Instagram or YouTube, LinkedIn, X, we go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back again at 1 p.m. Pacific, 4 p.m. Eastern. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. And we do want to get to the content regarding how you can contribute up to $70,000 via the Mega Backdoor Roth IRA, where the funds will end up in a Roth IRA at Betterment, and that's for 2025. But I see we've got some questions that have been teed up already, so we'll go ahead and knock out some of those questions. And if there's other questions, whether on this topic or other solo 401k topics, don't hesitate to chat over those questions, and we're happy to go through those. We appreciate the chance to engage. I have a 401k solo already, a solo 401k already, where I make personal and business contribution. Can I open one second plan with my solo 401k to just do after-tax contributions and roll over to the Roth? That's a great question. It's a common question because there's we have a lot of customers who start out with a plan somewhere else, and then they want to upgrade to our plan to take advantage of the service and features of our plan, whether they want to make Mega Backdoor Roth contributions, they want to take advantage of the $1,500 solo 401k tax credit, they want to take advantage of the compliance support, etc. So the process, though, is not to set up a second plan. Instead, the process is to do what's called a restatement. And as long as wherever you have your plan at today will open up accounts for third-party plans, then you could still keep your cash and investments wherever it is today. So for example, if it's at Fidelity, you could keep it at Fidelity. If it's at Schwab, you could keep it at Schwab. Now, it wouldn't technically be the same account because Fidelity and Schwab, they definitely open up accounts for third-party plans, but they require it to be a new account. But let's say it was at Vanguard, right? Vanguard, based on experience, they don't open up accounts for third-party plans. So the process, though, again, is a restatement. So you could think of that as a cut and paste where the plan continues, but now it's governed by our plan documents, which are going to allow for the voluntary after-tax contributions and transfer to a Roth. So as part of the process to onboard that type of plan, we would need to draft the documents that create the plan as a restatement. So that's why you see in our online application, we ask if you already have a solo 401k or a self-employed 401k, and if yes, what's the original effective date, which you can find that date on the adoption agreement. A lot of times it's January 1 of whenever you set up the plan. So that when we draft the restated plan documents, it relates back to that original date. So that would be the process, would be to do a restatement, and then most definitely you'd be able to start making those Mega Backdoor Roth contributions going forward. And we provide tremendous support in that regard. So For example, you have to have separate accounts. There's going to be tax reporting, which we handle. A 1099-R would have to be issued. We handle that as an optional free service, et cetera, et cetera. So follow-up question, would it be possible to still contribute after tax for 2024? I have extended my taxes, but I've already filed it. That's a great question. It's really a two-part question there. So if the plan that you already have was set up before the end of last year, then yes, you could definitely restate the plan with us. And as long as you filed a timely extension for your 2024 self-employed business tax return, let's assume that it was your business is a sole proprietorship. In that case, your self-employed business tax return is really your 1040. So as long as you filed a timely extension for that 1040, you'd have until October 15th to make those 2024 voluntary after-tax contributions. Obviously, subject to the limits, assuming you've got the self-employment income to justify the contributions, et cetera. So the mere fact that you filed the taxes already doesn't accelerate the deadline. Because you filed a timely extension, you could still make those 2024 contributions up until the extended 2024 self-employed business tax return deadline. Let's assume the business was taxed as an S Corp, in which case the applicable deadline is the S Corporation deadline. So if a timely extension was filed for the 1120S, that would give the individual up until September 15th of this year to make those 2024 voluntary after-tax contributions, again, subject to the limits, et cetera. So what's noteworthy is that making the contribution doesn't need to be reported on the 2024 personal or business tax return. So the individual wouldn't have to go back and file an amended return. What needs to be reported, though, is the subsequent transfer from the after-tax account to the Roth solo 401k or Roth IRA. That gets reported on a 1099-R. And again, we handle that as an optional free service for our customers. And that's going to be reported, though, for the year of the transfer. So if the after-tax to Roth transfer occurred in 2025, which of course it necessarily would, right? Because now we're in 2025, then the 1099-R wouldn't be issued until 2025. So it'd be issued by the first part of 2026. So even though the money that is the source of that transfer was a 2024 contribution, because the money was not moved from the after-tax account to the Roth account until 2025, the 1099-R is not issued until 2025. Great. Well, thank you so much. Appreciate the chance to discuss these topics. I made an accidental contribution to my solo 401k. Can I just back it out? That's a great question. I mean, of course, it depends on the facts and circumstances. The most conservative approach would be to not reverse the contribution. But if it was, say, shortly thereafter, shortly after the contribution was made, there are individuals that make a reasonable business decision to just reverse it and consider it to be a bona fide error. Hopefully that gives you some feedback that you're looking for. All right, next question. And after we've gone through this next question, we'll go through the slides regarding Betterment Mega Backdoor Roth IRA, how to contribute $70,000 to a Roth IRA in 2025. And then if there's more questions, either on that topic or other topics, don't hesitate to chat it over and we'll keep going through the questions. So I ended up doing 2 conversions from voluntary to Roth this year. So I filled out the form on your website twice. Is that going to mess anything up on your end? No, we can just aggregate the numbers. It'll be aggregated and reported on one 1099-R. Okay, wonderful. So yes, let's first lay the foundation when it comes to making a Mega Backdoor Roth IRA contribution of $70,000 where the funds ends up in a Betterment Roth IRA by first talking about being able to make Mega Backdoor Roth contributions generally. So in order to be able to make that high amount of Mega Backdoor Roth contributions, it requires a solo 401k. So in order to be eligible to set up a solo 401k, one needs to be self-employed with no full-time W-2 employees, no non-owner, non-spouse full-time W-2 employees. So the self-employed individual, him or herself, can be a W-2 employee, or their spouse could be a W-2 employee, but there's no non-owner, non-spouse W-2 employees. So that's what makes someone eligible to set up a solo 401k. Now, if you want to make Mega Backdoor Roth contributions, you've got to have a solo 401k plan that allows you to make Mega Backdoor Roth solo 401k contributions. For example, if you go to a typical brokerage, a discount brokerage, they're not going to allow for Mega Backdoor Roth contributions. Some of them now allow for Roth contributions, but not Mega Backdoor Roth contributions. So making a Mega Backdoor Roth contribution is really a voluntary after-tax contribution. So you have to have a plan that allows for voluntary after-tax contributions, step one. And then step two, a transfer out of the voluntary after-tax solo 401k account to a Roth IRA. So a solo 401k plan is really the documents that create it. So when someone sets up, for example, a basic solo 401k plan at Schwab or Fidelity, they're using Fidelity and Schwab's documents, which don't allow for Mega Backdoor Roth contributions. But our IRS-approved documents do allow for Mega Backdoor Roth solo 401k contributions. So clients will open up a plan with us, and then they'll use the documents to open up an account somewhere else. So we have a lot of experience. We've helped thousands of customers open up plans where they're making Mega Backdoor Roth contributions, and there are specific compliance steps that have to be followed, right? For example, when you make the voluntary after-tax contribution, it's got to go into a separate voluntary after-tax account. So we assist our customers with establishing the required sub-accounts. A lot of times they end up with 3 different accounts, one for pre-tax, a second for after-tax, a third for Roth. In addition, there is compliance support that's required when you make a Mega Backdoor Roth contribution. Specifically, when you transfer the funds out of the voluntary after-tax solo 401k account to a Roth IRA, that's going to need to be reported on a Form 1099-R. And we handle that 1099-R as an optional free service for our customers. Now, for 2025, the voluntary after-tax solo 401k contribution limit is 100% of your self-employment compensation, dollar for dollar, up to $70,000. That's how we came up with the concept of being able to contribute $70,000 where the funds ends up in a Roth IRA over a Betterment. And then obviously once it's in that Roth IRA, you got the potential for tax-free growth. So the specific steps will be to first, once you're eligible to set it up and you set up a solo 401k plan that allows for the Mega Backdoor Roth, like our solo 401k plan, would be to first open up a voluntary after-tax account. So this can be at the bank or brokerage of your choice. We'll help you do that. Make the contribution. So we're fielding questions every day from customers in terms of how much they can contribute. And again, you can contribute 100% of your self-employment compensation, dollar for dollar, up to $70,000 for 2025 as a voluntary after-tax contribution. So for example, if your business is taxed as an S Corp, your self-employment compensation is your W-2 wages. So as long as you have at least $70,000 of W-2 wages from your self-employed business taxed as an S Corp, using the S Corp example, that individual will be able to contribute all of it. They'd be able to contribute $70,000 as a voluntary after-tax contribution. Step 2 now is transfer the funds out of the voluntary after-tax account to either a Roth solo 401k or a Roth IRA. Well, you could transfer to a Roth IRA at Betterment. So you could wire the money, for example, to a Roth IRA at Betterment. Now, when you move that money from the voluntary after-tax account over to the Roth IRA, that is going to be reportable. It's reportable by the plan for the year of the conversion, kind of like in the example we went to from the good question at the outset. So we have a form on our website that customers use to give us the information that we need to prepare the 1099-R. It just takes a minute to complete that information. You're basically just telling us the amount that you moved out. That'll get your plan in the queue for us to prepare the 1099-R. We prepare that for the year of the transfer. So if the money is being deposited here in 2025 and transferred out of the plan to the Roth IRA Betterment in 2025, it'll be reportable on a 2025 1099-R. And again, we handle that as an optional free service for our customers. Now, there is a deadline to make the contribution. It's going to be the self-employed business tax return deadline, including any timely filed extension, kind of like in the example that we went through at the outset. But there is no deadline to transfer the money out of the plan to the Roth IRA at Betterment. It could happen at any time, even after the contribution deadline. Here's a good image as it just shows how the individual has different solo 401k accounts, and then the money's moved out of the solo 401k over to a Roth IRA, for example, at Betterment. So hopefully this is helpful. Again, if you found it to be helpful, please please share with others that you might think this is helpful, right? There's a growing number, again, of freelancers and self-employed individuals. A lot of folks may be trying to catch up on retirement savings. So this can be a really powerful tool to catch up on your retirement savings goal. We also want to highlight that we have a community. We have over 30,000 members. It's totally free to join. It's not just limited to customers. You can join for free at mysolo401k.net/my-community. We got forums on there where people are posting questions. You can come and you can ask a question or see what people are talking about. You can come and check out our library of videos and webinars. We also have the industry's first AI, which is totally free to use. It's a great way to find answers to questions quickly, other resources. You can access it for free at solo401k.ai. All right, so we got another question here. Thank you so much for the good question. All right, looks like this may be from an existing customer asking about the 1099-R. It's going to pull up your email from the registration list here. Oh, it looks like you're not on the, you didn't. So, well, the 1099-R is issued for the year of the transfer. So if it occurred in 2025 and you're an existing customer, you can just go to mysolo401k.net/forms and you could submit the information now. We need the information for during the year when the transfer occurred. So you can wait until the end of the year and you can give us aggregate information, or you can do it at the time of the transaction. But if this happened back in 2024 and you hadn't given it to us yet, then please, you can please email us at support@mysolo401k.net so that we can give you options to maybe help you with that late 2024 1099-R. Yes, even if it's managed by Fisher Investment, I'm assuming that's a institutional account. So we have a lot of clients that are working with advisors who custody at Fidelity, where it's an institutional account. And so Fidelity Institutional will still open up accounts, just like we talked about, for third-party plans. So we definitely have plenty of folks who have their solo 401k plan through us, but the account at Fidelity Institutional, where it's managed by an advisor, like it looks like it's like in your case. All right, well, thank you for the great participation. Please continue to participate. Please like, please subscribe. Don't hesitate to join the community. All right, everyone. Thanks so much for the good session. And until next time.